Welcome to the Deep Dive. Today we're digging into something really interesting from CrowdStrike. Stellar Q2 results, but the market wasn't entirely happy. We're going to quickly unpack the numbers, the guidance, and what it all signals for CrowdStrike and, well, the whole cybersecurity space. Okay, let's jump straight into Q2 for fiscal 26. This period ended July 31st, 2025. George Kurtz, the CEO, he called it an exceptional quarter. And when you look at the numbers, yeah, they hit a record $221 million in net new annual recurring revenue, net new ARR. And, for subscription businesses, that net new ARR, it's really the key, isn't it? It shows the pure growth. Like after any churn or downgrades, it's all about new business and expansion. This pushed their total ending ARR up. It grew 20% year over year.
Yeah, to $4.66 billion. That's a pretty significant base.
Absolutely. And total revenue, $1.17 billion for the quarter. That's up 21% from last year.
Mostly subscription revenue, right? About $1.1 billion.
Exactly. $1.1 billion, up 20%. And just a reminder for everyone listening, these are non-GAAP figures unless we say otherwise.
Right, non-GAAP. It helps, filter out things like stock-based comp to see the core operational performance a bit clearer, kind of apples to apples. And these numbers really do back up what Kurt said about reacceleration ahead of expectations. When the CFO, Burt Podbere, mentions strong execution boosting their conviction for continued net new ARR acceleration in the second half. Well, it sounds like more than just talk, because for these cyber firms, consistent, strong net new ARR, that's just crucial. It means new customers and existing ones spending more.
Right. Landing and expanding.
Precisely. And it wasn't just ARR. Operating income, $255 million a record.
Wow.
Diluted EPS, the $1.93, another record. Cash flow from operations, $333 million record. Free cash flow, $284 million. Record again.
Okay, I'm sensing a theme here.
No, yeah, and a solid 24% free cash flow margin. Plus, their cash pile grew to almost $5 billion. $4.97 billion, to be exact.
So financially, a very healthy picture. Efficient, robust.
It definitely points that way.
Yeah, the scale is impressive, shows real momentum, a strong market position right now. But the market always looks forward, doesn't it?
Always, and that's where it gets complicated.
This is the twist, right? Despite that amazing Q2, the forward guidance caused a bit of a stir. So for Q3, ending October 31st, they're projecting revenue between, $1.208 billion and $1.218 billion.
Okay.
And non-GAAP EPS between 93 and 93.95.
Yeah.
Then looking out to the full fiscal year ending next January, revenue guidance is between $4.75 billion roughly and $4.81 billion.
4,749.55 to 4,845 million, fives technically.
Got it. And full year non-GAAP EPS projected between $3.60 and $3.72.
And right here is the elephant in the room for the market reaction. Investing.com noted shares dropped about 6% in aftermarket trading right after this news broke.
Ouch. After those Q2 numbers. Why?
It was that Q3 revenue guidance, the $1.208 to $1.2121 billion range. It fell short of what analysts were expecting, which was around $1.23 billion.
Okay. So even though it's still massive growth, it wasn't quite what Wall Street penciled in for Q3.
Exactly. And it's funny because the full year revenue guide was basically in line with consensus.
Right. I saw that. Consensus was $4.78 billion. Their range includes that.
And even better, their full-year EPS guidance, the $3.06 to $3.72. That was actually above the consensus of $3.51.
So better profit forecast for the year, revenue in line for the year, but the next quarter's revenue miss triggered the dip.
It really highlights how the market can fixate on the immediate term, sometimes overlooking the bigger picture or longer-term strength. That near-term revenue figure just carries a lot of weight in those initial reactions.
It's that classic tension, isn't it? Short-term trading versus maybe a longer view.
Absolutely. And of course, you always have the standard disclaimer that forward-looking statements have risks, actual results might differ, the drill.
Sure, standard safe harbor stuff.
Yeah.
But it really makes you think about investor psychology. Great Q2, but caution on Q3 revenue dings the stock.
Okay, so let's look beyond that immediate guidance reaction. Let's unpack the underlying health you mentioned, the business momentum, the platform itself. Yeah, definitely, because there's a lot happening there. If you look at how customers are actually using the platform, the adoption rates are, pretty remarkable. As of Q2, 48% of their subscription customers use 6 or more modules.
Almost half. Okay.
33% use 7 or more, and nearly a quarter, 23%, are using 8 or more.
So they're not just buying one thing, they're going deeper into the platform.
Exactly. And get this. For their biggest customers, the ones spending over $100K in ARR, 60% of them use 8 or more modules.
Wow. Okay. That suggests real consolidation onto their Falcon platform.
It does. It shows companies are seeing value in integrating more of their security with CrowdStrike. And this flex customer thing they talk about is quite smart, too.
Flex customers, what's that?
Think of it like building blocks. Customers can easily add new capabilities, cloud security, identity protection, whatever they need when they need it. It makes the platform incredibly sticky.
Ah, so it encourages expansion within the existing base.
Right. They mentioned over 1,000 Flex customers now,
Yeah.
and over 100 Reflexes customers who came back and added more.
Reflexes, okay.
And those deals are big, average Flex deal size over $1 million in ending ARR. The Reflex customers added nearly 50% more ARR on average. It's a really effective land and expand tactic. And look at the growth in some key strategic areas. This is as of Q2 FY26. Cloud security. Ending ARR over $1.56 billion, growing faster than 40% year over year.
20%, that's huge.
Next-gen identity. Ending ARR over $435 million, growing over 21% year over year, still very strong.
Uh-huh.
And LogScale, their next-gen SIEM, security information and event management.
Right, the data analysis part.
Yeah. That ending ARR is over $430 million now. And it grew. Wait for it. Over 95% year over year.
95%, okay, that's explosive.
It really is. Shows they're making serious inroads into these critical, high-growth security segments.
Yeah, those adoption rates, the growth in cloud, identity, SIEM, that really paints a picture of long-term health, doesn't it?
Yeah.
It suggests customers are sticking around and spending more, building that moat around the business, even if Q3 guidance was a touchlight for some.
Exactly. It's about the underlying strategic expansion, not just one quarter's forecast.
So beyond just the financials and adoption, how are they positioning themselves, for the future, especially with AI becoming such a huge factor everywhere?
Well, that's the other key part of the story, isn't it? It's about continuous innovation and maintaining that market leadership position. You see things like Gartner naming them a leader in the endpoint protection Magic Quadrant, again, for the 6th time in a row.
6th time, wow.
And Gartner put them furthest right for completeness of vision and highest for ability to execute. That's significant validation from analysts.
Uh-huh.
Plus, they got Customer's Choice and Gartner Peer Insights for user authentication, and leader spots in IDC MarketScape's GigaOM radars, covering cloud protection, exposure management, SIEM, identity security.
So broad recognition across the board.
Yes, and Frost Radar named them a leader in managed detection and response, too. These aren't just participation trophies, they signal real strength across critical areas. And innovation-wise, they've been making some interesting moves lately. They bought a company called Onum Technology that's about managing telemetry data faster, getting security insights quicker.
Okay, makes sense.
They launched Falcon Next-Gen Identity Security, specifically designed to protect not just humans, but also non-human identities, like service accounts and even AI agents.
Adapting to the new landscape.
Exactly. They introduced CrowdStrike Signal, which is a new set of AI-powered detection engines, plus new services like an AI systems security assessment, readiness consulting for AI, and CCOPS.
So really leaning into the AI security challenge.
Definitely. They even integrated with OpenAI's ChatGPT Enterprise API for compliance and are working with AWS on AI security workflows. It's all pointing towards AI native security.
And that focus seems critical, given the market potential. You mentioned the TAM, the total addressable market.
Yeah, the numbers they project are staggering. For this AI native security platform, they see a TAM of $116 billion for calendar year 2025.
Well, $116 billion next year.
And growing to $250 billion by calendar year 2029.
$250 billion. Okay, that's a massive runway if they can execute.
Huge. It underscores why their focus on AI is so central to their strategy. Oh, and just a quick technical point before we finish about those non-GAAP measures.
Right, you mentioned them earlier.
They made a couple of tweaks in Q2 FY26 to how they present them. It involved things like how they account for employer payroll taxes tied to stock awards, basically including them now as part of stock-based comp expense in the non-GAAP figures.
Okay.
And they adopted a slightly lower long-term projected non-GAAP tax rate, 21%, down from 22.5% apparently due to something called the One Big Beautiful Bill Act.
Right, so these are basically accounting refinements?
Pretty much. The goal is usually to give investors a clearer view of the core operational performance by adjusting for certain non-cash items or things that can fluctuate a lot, and sometimes to reflect updated tax planning. It just aims for better consistency.
Okay, so summing up, we've got CrowdStrike delivering a really strong Q2, record numbers pretty much across the board, great platform adoption, especially with that AI native focus.
Yep, very strong underlying performance.
But the market keyed in on that slightly cautious Q3 revenue guidance, leading to that initial dip.
Right, that classic tension between current results and immediate future expectations.
All happening in this incredibly dynamic cybersecurity market, increasingly shaped by AI.
Exactly. Which leads to the final thought, maybe for you listening. Given everything we've discussed, CrowdStrike's innovation in AI security, their deep platform adoption, the huge market opportunity, despite that short-term market wobble over Q3 guidance, what do you think carries more weight for their long-term value? Is it the immediate quarterly forecast? Or is it that sustained strategic expansion and leadership in a market that's only getting bigger and more critical?
That's definitely something to think about. Thanks for joining us on this deep dive.